everyone. I've got a question for you. A serious one, but important. What would happen to your family if you weren't around to provide for them? The thought of losing a loved one is painful enough, but the financial strain that follows can be overwhelming. That's where life insurance steps in, not as a replacement, but as a safety net, offering peace of mind and the security of knowing that your loved ones will be taken care of, no matter what. The saying goes, expect the unexpected. Having life insurance is just that, and it's more than just a policy. It's an essential tool for protecting those you love and securing their future. Because in the end, the greatest gift we can give our families is the peace of knowing they won't face hardship in our absence. If you're ready to explore the options that are available for you, head over to quote.com and use our insurance comparison tool to find the best policies and rates customized to your life and needs. You'll be able to connect with local agents who can walk you through what kind of life insurance will benefit you. Today, we're going to be comparing term and whole life insurance in three main areas. First, we're going to define what they are, and then we're going to talk about some pros and cons. And finally, we'll learn about the average rates. Let's begin by defining our terms. No pun intended. First up is term life insurance. Term life insurance is often considered the simpler and more affordable option. It provides coverage for a specified period of time, typically 10, 20, or 30 years. During this time, if the policyholder passes away, their beneficiaries will receive a payout, known as the death benefit. The premiums for term life insurance are typically lower because you're only paying for coverage during the term and there's no cash value or investment component. For example, let's say you purchase a 20-year term policy. If you pass away in that time frame, your family will receive the death benefit. But if you outlive the term, there's no payout and the policy expires. It's a great option for those looking for affordable coverage to protect their loved ones during a specific period, like when raising children or paying off a mortgage. Term life insurance is like renting an apartment. You pay a fixed amount every month for a set period, like a lease. If something happens to you during that lease term, your family gets the protection they need. But if the lease or term ends and you're still alive, there's no payout. Just like when your apartment lease ends, you move out and there's no refund for the rent you've paid. There are 5 types of term coverages. These policies are best for people who do not have a large financial portfolio but wish to secure a form of inheritance for their beneficiaries. First is level term life. This means that the death benefit remains the same throughout the term policy. Next is decreasing term life, and this means that death benefit decreases by monthly or annual increments over the term policy length. Next is renewable term life. This means that the death benefit remains the same, but premiums will increase every year you renew. Next is the convertible term life, and this is a policy that converts to a whole life policy during an indicated interval of time without a medical exam. And finally, the return of premium term life. This is an add-on which will refund premiums if you outlive the term policy expiration. If you want to learn even more about these 5 options, check out quote.com's insurance calculator. Answer a few quick questions and connect with agents in your zip code. Next up, whole life insurance. On the other hand, it is more of a long-term commitment. This type of policy provides coverage for your entire lifetime as long as the premiums are paid. But what's really unique about whole life insurance is that it combines a death benefit with a cash value component. Over time, a portion of your premium goes into a savings or investment account that grows tax-deferred. This cash value can be borrowed against or even cashed out, though there are conditions and potential fees associated with it. Whole life insurance is like planting a tree in your backyard. You start by planting a small sapling, your policy, and over time it grows taller and stronger. As the tree matures, it provides not only shade and shelter, the lifelong protection for your family, but also produces fruit, the cash value, that you can harvest or use if needed. Whole life insurance premiums are significantly higher than term life, but in exchange, you get lifetime coverage and a growing cash value that can be used later on. This makes whole life insurance not just a protective tool for your loved ones, but also an investment vehicle of sorts. As your whole life policy's cash value accumulates, it offers you financial flexibility in the future. There are also a few different kinds of whole life coverage. First is your traditional whole life policy. This lasts a lifetime with fixed premiums and death benefits, and policies accrue cash value. Next is variable whole life. This is the same as traditional whole life, but customers can invest the cash value in an account managed by the provider. Next up is universal whole life. This means your death benefits will increase as long as you pass a medical exam, with more investment options for cash value. To compound upon that is something called variable universal whole life. This is the same as universal life with additional investment opportunities and flexibility. And finally is guaranteed whole life coverage. This doesn't require a medical exam, but it only pays for the funeral and burial costs. If you want to learn more about these different coverage options, check out quote.com. You can connect with local agents to find the best fit for you. Now that we've gone through what term and whole life insurance is, let's talk about some pros and cons of them both. If you're considering short-term coverage, here is a list of the top 3 reasons to get a term life policy over whole life insurance. Cheaper rates. Term life is the most affordable type of protection you can purchase. Next is simple policy terms. As long as you pay your premiums, your provider will compensate your beneficiary the agreed amount if you pass during the policy's term. There is no hidden cost. And finally, the conversion options. You can cancel term life insurance at any time, even before it expires, or convert it into whole life insurance at the end of the term. Although it's a straightforward and affordable type of life insurance, there are a few cons of term life insurance you should be aware of. First is the rate hikes. Once the term expires, your monthly term life insurance rate can significantly increase. Next, it has no cash value. Once you outlive the policy term, you get nothing back, unless you have purchased the return of premium feature at additional cost. And finally, the age restrictions. Some life insurance companies will not sell term coverage to policyholders over a certain age. The biggest risk of term life insurance is losing your investment if you outlive your policy. You can buy add-ons to protect your premiums or lock in rates at conversion, but these will raise your monthly rates. On the surface, whole life coverage can seem like an exclusive investment for the top earners crowd. However, whole life coverage never expires as long as you keep paying the minimum premium. Let's take a deeper look at these benefits of whole life insurance. First is locked-in premiums. Whole life insurance rates will never increase as you get older, and you can lock in the lowest rates if you buy coverage before you turn 40. Accelerated death benefits. This whole life insurance add-on can be a lifesaver if you're diagnosed with a terminal illness or life-changing injury. You can take out a percentage of the death benefits to pay for medical bills and lost wages. And finally is the cash value. Part of the premium is deposited into a cash reserve that works as a safety net to cover monthly payments. You're allowed to take cash out without paying tax penalties, and your cash value will be refunded back to you if you end the policy before you pass. Whole life insurance cash value will grow yearly, and the dividends you earn are not taxable. Unlike cash, properties, and jewelry, heirs have access to whole life insurance death benefits without any taxation. On the other hand, the earned interest from the deposit is still regarded as taxable interest income. Buying whole life insurance requires some knowledge of finance and investment strategy, as there are many options to customize your plan to suit your goals and needs. To avoid being penalized, consult your portfolio agent or accountant and consider this list of whole life insurance cons before you buy. But you can also head over to quote.com and use our insurance calculator to determine the best option for your specific needs. Here are the top 3 cons associated with having a whole life policy. Expensive premiums. Whole life insurance is more expensive than average, and many policyholders tend to buy less coverage than they truly need in an attempt to save money. Investment risks. How much your cash value grows will depend on how well you set up your foundation during the early years of the plan and the volatility of the market. Next is tax season stress. The cash value gain and loss and your interest growth from the reserve accumulation can make tax preparation much more confusing. Ultimately, if you wish your beneficiaries to avoid being taxed in the transferal of your inheritance, adding whole life insurance protection to your portfolio is a good option. Term life insurance is a better fit if you only need short-term coverage to pay any debts if you die unexpectedly. And finally, let's touch on what affects our wallets today, the cost. What would monthly premiums look like for term versus whole life insurance policies? Here's a breakdown of some of the top-rated insurance companies. As you can see, for a 20-year policy, the average rate per month is in the 20s. The same appears to be true for a 30-year term policy. However, for 40 years, it jumps up to an average of $54 a month for coverage. For a whole life option, your best price seems to be with State Farm, coming in at $128 a month. But remember that these are just some examples. Your rate will depend on your individual life factors and needs. If any of these companies catch your eye, you should head over to quote.com and use our free tool to compare the best policies tailored for you. Life insurance rates differ depending on where you live. By checking mortality tables and comparing your region and state with other states' payout statistics, a company may increase or decrease the average premium rate based on whether the area 1. Has a higher rate of obesity, 2. Has a higher frequency of serious natural disasters such as floods, tornadoes, and earthquakes, 3. Is prone to deadly illnesses or diseases, or 4. Has a high crime rate. The number of policies sold in your state will also impact premiums, and there can be different laws to mandate specific minimal coverages and how much companies can charge for a package. And that's a wrap-up on this overview of term versus whole life insurance. If you found this video helpful, don't forget to show some love by giving it a thumbs up. We'd love to hear from you too. Share your experiences with any of the companies mentioned in this video, and feel free to ask any questions you have about life insurance in the comments below. If you know someone curious about life insurance, share this video with them, who couldn't use expert tips on how to get the best protection for the unexpected events in life. Thanks for tuning in, and we'll see you next time.